Okay, welcome to another deal deep dive. This is Mitch Messer with Home Pride Properties, and this is where we walk through the financials in excruciating detail to explain how we see the deals that we are offering for our clients. This one is 7089 Vesta Way in Jonesboro, Georgia, and I want to dive right into this one. We will cover separately in a video or a segment following this one the specifics on ARV and fair market rent. So I won't spend a lot of time talking about those, except to say that we are positioning it as an ARV of 94.9. I think that's actually a bit on the low side, but bear with me on that one. But the purchase price is $92,000. And because there's no financing on this deal, this is a cash only deal. For the purposes of this sheet, since we try to keep a consistent sheet, whether we're doing a cash deal or a finance deal, we will make the down payment the same as the purchase price, which is what it'll look like when you have to bring all the cash to the closing. So down payment is also $92K. We're estimating 10 in repairs. This is a vacant property, so you will have the opportunity to go through it without any tenant stuff there as part of your due diligence and confirm for yourself that it's a house in great shape. It does need some cleaning. It's kind of dark. It looks to be a little bit dated in terms of the design, but it's not the kind of thing that couldn't be addressed with some paint and some blinds and such. So I think 10 is comfortably a fair estimate. You'll be the judge of that, but I doubt if it's more than that. I'm thinking more like 5 to 7, but 10 is going to work. $1,000 closing costs is pretty much my standard. It's probably going to be a bit less than that, but better more than less. There are no finance points because it's a cash deal. And we'll talk about the fair market rent later on in this video. And we'll come back to the earnest money in a bit. There is no debt service, it's cash. I'm pretty sure that this insurance quote or estimate for an annual premium is on the high side for a house in Jonesboro of this size. But again, better safe than sorry. $1,000 should more than cover a landlord policy in that part of Georgia. $400 for taxes is the actual 2019 Clayton County tax, and as far as I know, and the maintenance is our standard 3/4 of 1 month's rent as the maintenance budget. Again, I tend to be light on the maintenance or lighter on the maintenance, largely because I expect, if I were buying this, that I would do all the major capex stuff up front, and so the balance I'd have to carry each year or each month, I should say, for an allowance for future capex doesn't have to be all that large because I'm expecting not to have any major capex for at least a good 3 or 4 years. But you're welcome to adjust as you see fit. Vacancy, I am conservative here. Again, I assume 1 month out of every 12 is going to be vacant, so that's why that's 1,100 there, which works out to be 8.33%. And management, now we're estimating 10% of rents, and so of the 13,200 in annual gross income, I'm assuming 1320 of that's going to be paid out in management fees, which brings us pretty simply to a 13,200 annual gross, 4645 annual expenses for a net of 8555 annually. The expense structure you see here is 35, just a bit over 35%, which is reasonable for Atlanta. Actually, probably on the low side for Metro Atlanta properties, but certainly reasonable. So you get a pretty impressive monthly net cash flow. The cash on cash return isn't so big because, of course, you're paying cash for the property and you're investing in the repairs as well. However, I want to direct your attention to the method by which you would dispose of this property. I personally would not rent this. This is a 3-bedroom, 2-bathroom, 3-side brick home in Jonesboro. I would lease purchase this one. Pretty much anything that's a 3-bedroom, 2-bathroom or larger, I'm going to try to lease purchase because you can find somebody who would want to own that house going forward, not just rent it forever. And for someone who wants to own it, they'd be willing to pay non-refundable earnest money that would defray your upfront costs. So this is an okay deal as a rental. The 8.31% cash on cash is not horrible, especially by today's standards. And the 713 in cash flow is eye-poppingly good. But honestly, I would almost certainly market this thing as a lease purchase, and I'd be looking for, honestly, about $3,000 in earnest money. If I could get it, then that kicks our cash on cash return up because it defrays our upfront costs. We get that at the time of the signing, and so we're not looking at an 8 point whatever percent cash on cash. Now we've boosted it significantly, and honestly, I could probably imagine getting even more than that for a house like this. And I would also attempt to get more than market rent. I would be looking at more like 1150, which of course does wonderful things for your cash flow. But even if you only got the 1100, you're still in pretty good shape as long as you could get someone committed to owning the house and willing to pay you up front for the right to do so, and understood that it was going to be non-refundable. Yes, they'll get credit for it when they buy down the road, but they're going to buy down the road at your future price, which is not going to be 92. It's not even going to be 102. I'd probably market this thing as high as I could possibly imagine offering it with a straight face, because if it doesn't appraise, I can always be the good guy and come down. But if I could position this at 105 or 108 or whatever, then I'm getting paid on the back end. I'm getting cash up front to defray my upfront cost for repairs, for example, and for that first year at least, I'm doing wonderfully well. And if they can't qualify in that first year, I could do it all over again in the second year. And so this is a base hit as a rental. It is at least a triple, possibly even a homer as a lease purchase. So that's my take on this house. Again, the subsequent videos or subsequent snippets will cover our position on the ARV and our position on the fair market rent. Now let's talk about the valuation for 7089 Vesta Way. This is the Zillow page that comes up if you pop the address into Google, and you notice that it's got a Zestimate of $91,815, which is very specific. But I don't necessarily buy that, and I will go to the main page to take a look at the neighborhood. So this is the page for this neighborhood. This is Vesta Way, and this is Drexel. This is our house here on the corner, and you'd think for a corner lot we'd get a little bit of love, but we're not getting any. This property is, and that property is, and those are both 3.2s, and sure, they're a little bit bigger than ours, but at 116 and 111, it seems to me that we should be looking at more than 95, at least 100, I would think. But I just wanted to point out that Zillow is estimating, I'm trying to get the mouse out of the way so you can see it, both across the street from our property, this 104K, it's a 3.1.5, and it's smaller than ours, but for some reason magically they're estimating it at 104. This property here, which is right next door, is smaller and only 1.5 baths, and they're giving it a 99. So I guess my only point is that I'm not going to try to convince anybody that it's worth 140, but I think it's safe to say that it's at least worth 95, and I would be willing to say if the house next door is worth 99 and it's smaller and has only 1.5 baths and ours is a full 2 and brick, then I would submit that we are at least 99 ARV. But again, this is my position that the 94.9, which is what's in the spreadsheet, is easily defensible. 99 is probably more realistic. 91,815, I have no idea where Zillow got that. So that's where I am on valuation. Obviously, your mileage will vary, but I think we can all agree that 94.9 is as easily defensible. This 141 is an anomaly. I recognize it as such. Just let's go there real fast so you can see what I'm talking about. They claim that it sold in August of 2018 for $284,652. I highly doubt that. It's either a typo or it was part of a package of deals. This house by itself did not sell for nearly $300,000. I'm willing to bet, but I suspect that that's skewed this estimate. I'm willing to cut them some slack. I'm willing to ignore this one entirely, even though it is right next door. But the one across the street and the one on the other side of it are smaller and are getting a higher valuation. So I think they're just poking us in the eye. So that's my position on valuation. So what you see here is the rentometer page for 7089 Vesta Way in Jonesboro, Georgia. I've identified this as a 3-bedroom, which of course it is, and I'm looking back 3 months and 2 miles and all building types, and I'm getting a pretty much a 1,200 median and average rent. So you'll recall our estimate was 1,100, just to be conservative. 1,200 it looks like is very, very doable. I like the trend. I like the fact that it's heading up, and if we scroll down a little bit, we'll see that there's quite a bit of activity. There's our home, and there's a bunch of homes nearby. There's a 3-bedroom, admittedly 2.5 bath for $1,050, but there's an apartment 3.2 for $1,321. So I don't think it's a stretch to suggest that certainly 1,100 is very, very doable. 1,200 may be pushing it, but again, you wouldn't know it until you tried it. And if I were doing this as a lease purchase, which I certainly would be, I would definitely try 1,200 and see what kind of response I got. Because if I didn't get the sufficient response, I can always drop the rent. But anything over 1,100 and the numbers that we have in the spreadsheet work just fine. So that's our take on the rent. We believe that 1,100 is easily defensible, and possibly even more than that could be justified. So if you've seen enough and you're ready to take positive steps towards grabbing this house for yourself, you'll just need to give me a call, because your next step is likely going to be to take a look at the inside of this property. My number here is 678-532-8870. Just give me a call and I'll be happy to schedule a walkthrough inspection for you. And I will give you the heads up that we generally require, if we have not done business with you before, that you submit proof of funds to us. You can email them to us at documents@home-pride.com. And once we have that on file, we can schedule your walkthrough. If the property is occupied, we can arrange for you to see it in a guided manner. And if the property is vacant, we can typically arrange for you to see it on your own. And we look forward to working with you and helping you buy this great home.